What is going on, everybody? It's Stas here. Welcome back to another video. So we got to break down what's going on. Right now, the markets are not looking good. It's about 12:10 p.m. All of the indexes are down, so we got to break down the overall markets in this video. We'll talk a little bit about the Fed, kind of why the markets are selling off, and we'll break down some stocks. But before we do, make sure to join my Patreon and get your free stocks from Moo. You get up to 5 free shares, each of which could be valued all the way up to $3,500. Just use that link down below to deposit at least $100 and boom, you get your free money. And with that being said, let's dive into the video. So you guys can see SPY is currently down about 0.7%. The Russell's down 1.4%. We have the NASDAQ 100 down the most, pretty much giving back all of the gains from yesterday. It's currently down 1.7%. And we have the Dow not doing that bad, to be honest, but still it is down about 0.2%. Now the VIX is up over 9%, back over 20 points, which is not good. And we have gold and silver down. Gold's down 0.4, silver's down about 0.3%. And what I'm looking at here on SPY, guys, let's dive into it because this is important. What I'm looking at here is we can see we put in a high, and I'm not saying we're at the high right now. I'm not saying that we're going to collapse for sure from here. I'm just trying to see and kind of communicate to you guys and talk out loud here what I'm seeing on this chart, and I'm trying to interpret it myself, right? We see we hit a high last week of 462. Now we're hitting potentially a second high at 457, which is a lower high. So this could be potentially the start of maybe a further sell-off. And we're not completely there yet to the point where, again, we're crashing, we're free-falling. We're just simply selling off a little bit on this news about the Federal Reserve we'll talk about in a second. And one thing worth mentioning, guys, is we're now under both moving averages on SPY on this 20-day chart, probably on Triple Q as well. Let's pop that up. Yeah, Triple Q is now under both moving averages as well. Excuse me. And everything I just said with SPY when it comes to the lower highs applies to Triple Q. You can see here Triple Q hit 371.83 roughly last week. Now we just hit 369, and now it's tanking under the moving averages. So I think if we do break under for Triple Q, let's say 360 to 358, that general area, which was support on the 1st of this month, if we start breaking under that level, that is where we might start getting more aggressive selling, right? If we take that low out. And when it comes to SPY, going back to SPY, if this ends up breaking under 450, 448, that is where we could potentially expect an even more aggressive sell-off. Right now, we're kind of at that point where it's a little bit too early to definitively tell where this direction is going to be going. So that's what's going on right now in terms of this 20-day chart. If I zoom in on the intraday, you guys can see right around 10 a.m. on the East Coast, this thing went from 458, and this is SPY. And mind you, before that, for the first 30 minutes of the day, the markets were looking very good, very green, right? And then at 10 a.m., 10:05 a.m. on the East Coast, this thing collapsed from 478.80 all the way down to just 453.20, just about 10-20 minutes prior to me filming this video. It dropped about 1% intraday, and we had Triple Q during that same time period. Let's see here. Triple Q actually topped in the pre-market. This was at almost 370 at about 4 a.m. on the East Coast here, and it got all the way down to about now 362.85. So Triple Q is now down about 2% from the pre-market high to where it is now, which we're pretty much at an intraday low right now. So this is not looking good, guys, on the intraday chart. So this should show you how aggressive the selling really is right now. So today, when it comes to the Federal Reserve, we got a lot of the same things we already knew. But the funny thing is, when the market kind of forgets about things, remember, the markets tend to have a short-term memory. They have a short-term memory. So when the market forgets about things, let's say they put it on the back burner, but they're like, oh, we'll just worry about it later, such as the balance sheet tightening, the interest rates and so forth. When the market puts it on the back burner and then it comes up again, even though the market already knows about it, the market sees a little short-term freak out, right? That's kind of what we're seeing right now. Today, in a speech for a Minneapolis Fed discussion, Fed Governor Lael Brainard said that the central bank could start reducing its balance sheet, which is what we already knew, as soon as May, and would be doing so at a rapid pace. I think that's what kind of freaked the market out, a rapid pace, which means obviously in a quick manner, right? And that's very hawkish. That's very hawkish. And the markets do not like that. We all know that, or at least a lot of us do know that. So that's very aggressive from the Fed, which is what again is causing this, the rapid pace. And she also said currently inflation is much too high, which we already knew that, and is subject to upside risks. The committee is prepared to take stronger action if indicators of inflation and inflation expectations indicate that such action is warranted. So that's really what's causing this drop. The fact that, again, she's being hawkish, which the markets already knew that. Didn't Jerome Powell just come out a week or two ago and he said they're probably going to do, or they're looking to do, a 50 basis point hike? You know, this shouldn't be anything crazy, but she also indicated that interest rate hikes could come at a more aggressive pace than the typical 25 basis points, which I just said. It's really nothing new, but the markets, they tend to forget short-term memory. And now they're just seeing another freak out because of this. And maybe they just needed a reason to sell off. Going back to what I was saying last week, the markets, they've gone up so much in just a very short amount of time. Just in the past week or two, or more like 2 to 3 weeks, the markets, triple Q's up 20% or 17% at its high. SPY was up, what? 12, 15%, something like that. Let's see, about 12%. So these indexes are crushing it. They're just looking for a reason to sell off, and they're selling off to something that we all pretty much knew already, but it's just the markets for you guys, right? So let's talk about some stocks now. And by the way, if you guys are finding value, smash that like button and make sure to subscribe. It really helps me out overall in the algorithm, and we are trying to get the big goal here in the short term, 25,000 subscribers. We're really close. That's where we're trying to go. We're going to get there, guys. I appreciate all of you. So let's talk about some stocks now. We have the defense stocks doing very, very well. Lockheed Martin is one of them. LMT, this one is currently up about 1%. And remember, guys, the markets are not doing well today. So Lockheed Martin is outperforming. And what we're noticing is on the 4-hour chart here is we are slowly breaking out of the wedge. We're well above both moving averages. And now that I'm looking at this, wait a second, the intraday high was 454. Now we're at 448. So we were up a ton earlier in the day. We're now down about 1.5% from that intraday high. So Lockheed Martin is showing momentum out of the wedge on the 4-hour chart. Now it just has to break out of 458 roughly, which was that high point from, I think, 2 weeks ago, the 25th of March. If this is able to break out of 458 into the 460s, this could end up testing, maybe even taking the highs out from when we initially saw that spike early on in March. So I like Lockheed Martin. RTX is another one, Raytheon, which I used to own that about, I forget when I bought Raytheon. I think I bought it like 2 years ago. I sold out of it, or maybe less than 2 years ago. Maybe it was 2 years ago. I don't really know. I forget. But I bought it, sold out of it for a profit, and it's been doing well. It's one of those stocks that has been holding up pretty well over the past 3 years. Take a look at it. I mean, of course, it had a big dump like a lot of the stocks did in March 2020. I think I bought it after that, to be honest. Yeah, I did. Not right at the bottom, guys. No, not at the bottom. I probably bought it at 75, 65, 70, 75, 80 bucks. You know, I was buying all up there, and I sold it probably in the 90s, hundreds. It was a quick little trade, and it's been doing well. And at this point, we're right at $100, which you guys can see was that pre-COVID crash level. So that's a big resistance. We're also noticing just recently, it actually broke 100 just about when Russia invaded Ukraine. It broke 100, went to 105. Now I want to see if it breaks back over 100. You know, if we break over $100, we break the wedge. This is not there yet in terms of breaking out of the wedge. Like Lockheed Martin's already breaking out. It's showing a good sign of a breakout. Raytheon's not there yet, but if we do crack 100, 102, that is where a lot of momentum could kick in. So I'm going to put my alert now at $100, and I'll do another one at $102 a share. So let me do that. Mark is that we're above $102 a share, and I'm not looking at this as a long-term investment, guys. Same with Lockheed. I'm just looking to trade these. So that's LMT and RTX. The retail stocks are doing good today, and by retail I mean Macy's, Nordstrom, stuff like that. Macy's is currently up 3.2%. It's starting to, it's trying. It's not there yet, but it's trying to break out of both moving averages on the 4-hour chart, which I think if we successfully break out of $26, there's going to be a big pop towards $28, $28.50 on this stock, which you guys can see if I zoom in on this price action stemming back from the end of 2021, Macy's has literally gone to $28.50 about 10 times. If you count all the times it's gone at $28, $28.50, it's been a lot, many times. So I just want to see if we can do that again. So I'm going to put one alert at 20. I'll probably put it at $26 just to be safe. So I'll do one at $26, and you guys can also see I have one at $28.50. If that level breaks, if we do crack that high, obviously we'll be at multi-month highs, and then Macy's might be going back mid-30s. Who the heck knows at that point? But right now we're not there yet, so we got to watch it around $25 to $28. That's where I'm liking Macy's. And the next one that I'm looking at here, which I feel like I've mentioned a lot over the past couple of weeks, guys, it's Jwn Nordstrom, another retail stock like Macy's. This one's currently up 1.8% on the day, and the ascending triangle we called out about a week ago when we initially started talking about JWN, that played out. You guys can see that. We cracked above 27.75, above 28. Now we're at a multi-week high pretty much. So I think this is slowly but surely making its way towards $30, $31 a share, which is the next gap to fill here, which was resistance from the end of September back in 21. Also, of course, in October, based on this chart. You guys can see it. So if JWN breaks, or gets a 31 rather, and we'll see if it breaks. I mean, of course, we're going to be watching it. If it just gets to 31, that's another 6% move from where we are now. And if it breaks 31, the next spot it could be going is $35, $37, I mean, on a real breakout. And last I checked, JWN does have a decent short interest. It's not like some of these other Wall Street bet stocks where it's ridiculously high short interest, but I think there's a decent amount, and we could end up seeing a squeeze, you know, a big push. Who knows? We'll see. I mean, we've seen the stock go up 30% a day. We've seen it go down that much. So we just got to be careful and watch out for it, put alerts and so forth, which now that I'm realizing this, I don't even have an alert set. So I'm going to put an alert at $29, and I'm going to be watching it from that point. And with that being said, that's it, guys. Hope you all enjoyed the video. If you did, hit the like button, subscribe, drop me a comment, join my Patreon if you want all my buy, sells, call outs, morning update videos, plus more. That's linked down below, or you can go to stocksurfest.com/Patreon to join. And don't forget to get your 5 free stocks from Moomoo, up to 5 stocks, each of which could be valued up to $3,500. Just use that link down below, deposit at least $100, and boom, you get some guaranteed free money. And with that being said, I'll catch you guys in the next video. Thanks for watching. Peace out.